Hi folks, and welcome back once again to Meaningful Money. Okay, we last time just sort of introduced the M for making money, the M from the Simple Money acronym. So look back at that one, that was episode number 278. Look back at that one for just an idea as to where we're going over the next few videos. As I've done in the past with this series, I'll probably be dipping in and out of it, but I'll always try and sort of flag it with the Simple Money tag so that you can find the relevant ones on the site. Before we get into today's show, let me just thank the guys down here in the bottom right. That's 7 Investment Management, who continue to sponsor me here. They put their name to what I'm doing because they believe in what I'm doing, getting hopefully decent financial information out to everybody. So thank you very much, guys, for your support down there. There you are, down there in the bottom right. Now, I want to look at, you ready? Today's title is Platforms, Wrappers, Funds, and Assets. What on earth do I mean by that? We're starting to build on our foundations that we talked about last time, and it's important right at the outset when we're talking about making money to get our terminology right. So I'm going to sort of show you a picture that I would often do with clients because these terms are confusing. You need to understand what they mean, and then I'll stick with those terms in a future video. So I'm going to switch briefly to a screencast now so you can understand what I'm on about.
Okay, here we go. The smallest thing that you can invest in might be something like a share, or perhaps a gilt or a corporate bond or something like that. It's the sort of smallest unit of investing, a single investment. And the problem with these is that they can generate a lot of paperwork, they can cause a lot of hassle if you don't like dealing with that paperwork, and it can be confusing when perhaps companies change name and things like that. So a key way that people often simplify matters is to wrap these things into a fund. So now we've got our shares and our gilts and stuff wrapped up in a fund. So now you don't get all the paperwork and all the hassle and the name changing companies and stuff. That's all dealt with for you by the fund manager. All you do is you hold units in this fund, and the fund itself holds the assets. Okay, so up here at the top we've got assets, funds, wrappers, and platforms. The little blocks here are the assets, and they are wrapped in a fund. Now, let's just sort of replicate this a time or two. So we end up with 3 or 4 different funds kicking around. This quite often happens. People build up funds over time, and over the years they do different investments and stuff, and they end up with a portfolio of quite a few different funds. Well, you can see now there's quite a lot of underlying assets there, but they're nice and tidy, held in funds. But as you build up a portfolio of funds, your paperwork starts to build up again. So sometimes you can consolidate to get rid of that. But more importantly, these funds tend to be held in things. Things, it's not a very useful description, but I mean things like, for example, ISAs, or maybe a pension. Handwriting is terrible. So now what we've got individual assets here, held in funds, held on what I call wrappers. Now, the thing that sort of distinguishes one wrapper from another is usually access. So you can access money on an ISA, you can't on a pension, and taxation. So the rules are different taxation-wise between ISAs and pensions. There are other kinds of wrappers, of course, offshore bonds, stuff like that. But I often come across clients who have several ISAs and several pensions, and again, that paperwork starts to build up. And so what's happening these days is that more and more people are holding these assets on what are usually called platforms. And all a platform is, it's a kind of admin system with an online login usually these days, and it's an admin system where you can hold different kinds of tax wrappers in one place and access all manner of different funds and through those funds all manner of different asset classes down here. So you end up with a kind of hierarchical structure with your assets at the very bottom, the simplest kind of investment. You get those assets wrapped in a fund. You get funds held on a wrapper, like an ISA or a pension, and more than one wrapper of different types held on a platform, which is a kind of general administrative system.
Okay, I hope that makes sense. Platforms, wrappers, funds, and assets. Those are the things we're going to be talking about, and we're going to start next time. We're going to start sort of discussing all the different kinds of asset, the sort of lowest, smallest bit, if you like, of that great package of things that you can build your money in. So we're going to start looking at the different kinds of assets, and I think next time we're going to start talking about cash. So stay tuned for that. Thanks for watching, and I'll see you next time.